Wall Street's biggest bull has just revealed his target for the stock market in 2024. So what is it, and is it possible? Today we discuss that, along with whether the November into December rally is actually erasing the Federal Reserve's tightening work. We also need to discuss what happens after that tightening starts to come off. Will the market actually rally or move down further? And then it brings us to the big jobs number that's coming. Volatility is expected to spike, and we've been in a coiling market for quite some time. If we break out, we know that those results can be significant. So liquidity traps will no doubt be around over the next 24 hours. We're talking Magnificent Seven, everything to do with the NASDAQ right now, and of course, what we expect to happen with yields coming into this big jobs number. Well, welcome back everybody to the Daily Show, where we talk about the macro lead indicators and the hottest charts together. My name's Tom. We've been running this show for over 3 years. And if you like anything to do with markets on the daily, make sure to subscribe and smash that alert button. Let's talk about rotation. So it was a day up for big tech. And of course, AMD was leading the charge with some nice new infrastructure and technology coming out from the company and people getting quite excited about it. We also saw that was really just a reversal of the previous session, though energy was still doing quite poorly. And that was really something we were watching over the last 24 hours, with oil doing something that we did expect, making a new low and then finding some rallies. More on that later on today's show. But the story still remains the 5 days. Basically, we're seeing rotation into smaller caps and some of the beaten down sectors. Some of our favorites, biotech, home builders, regional banks, and others have been doing a lot better over the 5-day session, and they continue to kind of hold up. And this shows us that there's rotation in the coil. Now, a lot of people are asking what's going on with this December. Why is it not selling off? So a lot of it has to do with the options and the OPEX that's next week. But more importantly, it's also to do with sentiment. We will be looking at the new sentiment surveys that just came out because the results have switched a little bit from the previous weeks. We also know quite a few people are still getting squeezed out in markets, and we'll talk about that soon. So this is a traditional December, a sidewaysy kind of coiling market followed by a rally. We've shown this chart before, and of course, we've used it and talked about it. This is what happens when we tend to have a better year, when, of course, we're being a bit more selective with the data, and we usually see a bit of a fall off. And it looked like that could have been possible and still is. And if we do fall through, we've got some key levels to be looking at on the NASDAQ and S&P later on. But in general, with both charts, everything changes around the middle of December. So could that be when we break the coil? Well, it certainly is possible. And of course, we'll be doing some of our forward projections for 2024 on our VIP free weekly newsletter. So make sure to check out the links in the description down below if you're interested. So let's just quickly talk about election years and presidential cycles. We're in a pre-election year at the moment, so I guess you expect it to generally be pretty good. But year 4 does tend to be still relatively good as well. Now, 2024, I expect it to be quite volatile. JP Morgan's talked about this a little bit, but here are some bullish stats that you might like if you are feeling bullish and you are feeling the kind of market into 2024. First up, when we see percentage of S&P 500 stocks at 20-day new highs, which we have seen a reading of just recently, that does tend to lead into a pretty good breadth thrust kind of read. And this means that the rest of the market is starting to come with the Magnificent Seven. Obviously, Magnificent Seven at the moment coiling up and underperforming, but we've seen some sectors, as we've already talked about, doing quite well. Now, this can average out over the next 12 months as a 17% gain. So coming in on that kind of high-end standard for an election year. Will it be like that? Will we reverse from a soft landing? Well, that's going to be an interesting point. So let's talk Tom Lee's biggest S&P 500 forecast. Yes, he's going for 5,200 by the end of the year, roughly 14% above its current levels. Now, that just so happens to be the kind of normalized election year. Do you agree with Tom Lee or do you disagree with him? Let us know in the comments down below. Here are some other interesting charts. This is just to do with the international market kind of aspect. So if we're talking about China, and obviously a horrible market at the moment to be in for the last couple of years, it just got downgraded again from Moody's. So Moody's has now put in 4 China downgrades over time, and it's interesting to see what happens after those downgrades. Here are the last 4 reads, and I'm just going to read you some percentages here. Plus 9.8%, plus 41.8%, plus 89.3%, and plus 19.8% when downgrades have occurred over the next year. So we get downgrades coming through. Well, you might not want to always trust the downgrades because the market, of course, would be telling you something completely different in terms of what does happen there. And it's kind of in line what we've talked about with Chinese stocks recently. They're most likely starting to bottom off. And even with all these downgrades and negativity around the market, that's the type of thing you often look for. Think about it. When fear hits the peak, that's often when you're starting to look. I'm not sure if it's Barber though, because everyone keeps saying Barber, and that's one of the stocks that I've been staying away from for a long time now. Let's talk sentiment and what's going on in the market. So in the sentiment surveys, everyone's been green. Everyone's all good and it's all green. And we just saw people going from neutral into bearish. So that's really the big change that's happened over the last week. But I thought this would be an interesting time for us to talk about what's going on in the futures contracts, because of course we're all saying that we're bullish, but when you go and have a look at the futures contracts that are out there at the moment, and these are mostly traded by retail, it might tell you a different story. Here are the reads. I mean, this is pretty wild. You've got 87% of people opening positions have been bearish on the DAX. Now, if you've been watching the DAX on the channel, you would know that the German market has been absolutely flying. The Dow, 81% bearish, although that has dropped off. But what I want to talk about here is oil and gold. So gold was only 40 to 42, something like that, % bullish. Then we saw that massive squeeze in gold, and now it's come back down and people are starting to turn bullish all of a sudden, 61% bullish. Well, it's probably not the best time, as we've shown on this show and we'll show today, that data doesn't really present a great time for gold traditionally. So it's interesting to see that number rising back up. Another one that I think is kind of interesting is oil. 89.1 or something % of people were bullish and 11% were pretty much bearish on this particular pair. Now, this is not new. We've basically been between 80 and 90% on the bullish side for oil in terms of retail traders. And guess what oil's been doing? It's been dropping off. So just remember, this is shared on our X account if you want to follow it along. But that's something that's just, an amazing bearish reading in terms of only 11% bearish, yet that's been what the market has done. And the reason I bring that up is because this is the result of what's going on with TD Ameritrade clients, and they were net sellers of equities in November. And this is a huge difference between, of course, what's been going on. So S&P 500, we actually saw net selling while the market was rallying up. Now, interesting fact, because of course that's a huge reason why the market kept going and going and going, because people were selling off. People were actually selling their positions. They were selling in general and they were getting bearish, even though they're claiming in a lot of these sentiment surveys that they're feeling bullish. It brings us into another sentiment thing, which is, of course, talking about what's going on with Bitcoin. So there is yet to appear retail euphoria with respect to Bitcoin, which is a healthy sign. Now, I'd agree with this. If you actually think about Google searches, it makes a lot of sense, especially when crypto really requires so many retail people to get involved with it. This could be just the beginning, but it's nothing new. We do tend to see this quite a lot. And you'll notice that even in 2020, during that halving kind of cycle period, you'll notice that it goes up a little bit, but then it drops off and then it kind of sits for a while until we see that huge December run and everybody gets involved. That's when you get that euphoric stance. Now, that doesn't mean that it can't go down, but it's an interesting chart none the same. And this is something that I would be following if you're a crypto trader. What's going on with searches for things like Bitcoin? Remember, when people search recession, it's unlikely a recession will occur. When they search soft landing, it's probably more likely a recession will occur, especially if we've got uninversion of yields, which we've spoken about before. Central banks continuously buying gold. Now, this is the problem with stats. Sometimes it looks pretty good for gold on the surface. But I want to remind you here that at one point, central banks held 80% of their balance sheet in gold. Today, it's barely 20%. So yes, they're purchasing. Yes, that may help underpin gold's price and keep it in a sideways market for a period. But that is something that I think is interesting about stats. Let's talk options. So why are we pinned within this area? Well, here are the options expirations coming up. And you can see there was the 7th, the 8th, and then the 15th. And what you might notice is that we pretty much are trapped within a zone at this stage. You can see those 4,600 positions that are floating around. You can also see the put positions that were there over the last couple of days and remain into this market into the Friday. So, of course, non-farm payrolls hopefully can get us out of here, but this is why we're pinned within two ranges. Basically, options are sitting right in the middle, and we're going up, down, and all around while premium is being exhausted. We do know that positioning for things like oil, and we're going to talk of positioning here, CTA positioning has been dropping off. That means the biggest funds were dropping. I'm looking for a turn to the upside here in positioning. If we do start to get that, it could show us that oil is basing off. And we also know that Goldman Sachs has come out for the market and said that in most of their kind of current models, they're seeing CTA positioning sideways, down, or down more. So that's an interesting read. That's the first time we've seen that in a while. And it makes sense because we've got here the S&P 500 positioning, which has obviously been dropping off while we're coiling here in the market. And we've also seen the NASDAQ positioning dropping off. And what that could be showing us is that the biggest players actually have been trimming some of their profits and that they expect some form of pullback soon. Now, predicting a pullback, as we've already been told, is very, very difficult. So we're needing that price action. We did see the signs of the Qs weakening, which we'll talk about later on, because that level is going to be, I think, one of the key zones that we need to watch over the next 24 hours. Hedge funds have also started to sell their positions over the last 3 weeks, and we've seen that in smart money versus dumb money as well. They've stopped purchasing at this level, and that's pretty traditional. They usually look for a pullback to get back in. We'll look at the price action soon. So what are some of the bull cases also for the markets at this stage? Well, of course, major economies around the world, financial conditions are easing. They're getting looser. Everything's getting a little bit better, and more expectations of rate cuts are coming. Now, that's probably because they broke something. But remember, the Federal Reserve were claiming that they weren't going to rate cut. The market was saying 2 rate cuts for into 2025. Now it's 5, 6, 7 rate cuts expectation. Costs of puts, very cheap at the moment, according to Goldman Sachs. And that makes sense. We're in a coiling market. So basically, we're at a point where fear has gone from the market. It can still rally higher, but at the same time, these are unusual times. You don't always hit these points where puts are so cheap. So position-based options traders may like that if they're looking at the medium to longer term. So what about the non-farm payrolls numbers? What's happening with the jobs numbers moving forward? Well, we know when US job openings and US job openings basically weaken off, unemployment rate usually is to come, and that means that the Fed is done hiking. It's another good signal just to say, yep, it's pretty much over from the Fed. We already know this, but it's very, very likely. And this is the type of thing where you tend to see, obviously, the Fed now start to rate cut. And it's just another, I guess you would say confirmation. Remember, unemployment numbers are behind the times. They're lagging, so they won't really give you much predictive power. But it is proof in the pudding that things are starting to turn around from that aspect. Something's probably broken. Again, we're looking for what that is, and we're going to watch all of our lead indicators that were coming up in today's show to figure out whether it can happen soon. Here's S&P 500 returns after having such a glorious month. November was no doubt amazing. We do tend to go into a coiling market, which is shown by this stat here, only 1% average gain. A lot of reds as well that tend to come through. So this December, my perfect scenario would be drop off a little bit, rally back up, maybe get a little higher. That would be generally what I'd be looking for. And of course, I'd like to see it from a rotation-based perspective. Let's just quickly talk gold because everyone's discussing it at the moment. Remember the stats from seeing that ridiculous 52-week high with the squeeze. They do tend to kind of lean into a little bit of consolidation. We also see that consolidation around gold stocks. 17% of the time, they are only positive 1 month later. Pretty damning for gold stocks. And along with retail traders getting more bullish on gold spot, it does mean that, it could be in for a little bit of a sideways to downward action. Russell 2000, if we are going to see weakness, this is pretty much where we are usually. And then, of course, we tend to see strength. So the Russell is pinned to be one of the better markets over the next month. And we do need to also remember that insiders are not concerned at this stage about what they are seeing in the economy. They're actually buying their own stocks. And this is for big technology. So even though it may seem expensive on the surface, they're still doing it. Do remember recessions are painful. Generally speaking, if we do get one, good read for it will be the jobs, obviously, unemployment starting to lag off. And then, of course, uninversion of the yield curve, US 2 years versus US 10 years. Most of the losses happen during the recession itself. And this is what's on average occurring. Now, we do have one coming up in our newsletter for the weekend. So make sure to subscribe for that because I've got a great read there coming through. So let's talk activity and large transactions. We did see a big trade on the SPY the other day, and we've seen some activity off this level. This has been traditionally where we've seen some shorting. Just underneath 460 at around the 459 was where we saw orders come in, and it's basically the resistance point of the current market. Now, we expect some activity coming into jobs numbers. So jobs numbers are going to push. Same thing going on with the Qs, but even more transactions. And we keep pushing up to these levels. and rejecting off those zones. So it makes sense. Big transactions up there. Every time it gets there, it kind of looks like someone's selling. But if the markets do rally up and they break through on the weekly, get ready for further squeezing. I mean, that's just the general gist of what's going to happen, unless it's a super trap, which we'll, of course, be looking at both sides over the weekend video. iShares Gold Trust, yep, some big transactions coming through. Again, they could be just kind of taking profit for a little bit here. And Treasuries continues to be at these high points. So that's something that is quite interesting. Also, still looking for solar to break up and out, because if that does happen, we have seen what looks like some accumulation occurring at this stage. All right, let's talk options and unusual activity. There were a couple of big ones. AMD's got to be the big one here. 9.9% up on the session. Pretty glorious for AMD buyers. Huge amounts of calls coming through. It was a serious day for AMD. They did very, very well. We also saw some other companies here showing some pretty big ones. 3.22 times average volume for Google, which was interesting. 509,000 calls. And look at the SPY, 4 million puts versus 2.8. So when we scroll down, you can see calls still outweighing across all the legs. Actually a fairly low options day coming into non-farms. Expect Friday to be a lot more. And retail made up 27% of the single trade leg. So that's actually quite high across the board. Let's move into now what we've got going on with our yields and everything to with the lead indicators and the big levels. First up, effective yield was down. It's kind of bullish for markets at this point. Equal weight market still hovering around that resistance point. Again, not really negative on the market, something that we're looking there. We've got bond indicators still fairly bullish, going to new highs. Okay, that's pretty strong. We've got the American consumer, often considered consumer discretionary versus staples, again, making new highs. Not exactly a weakness in the market, is it? And then we've got the US 10-year. Now, this is one I'm going to be watching. 10, 2, these types of things. We've kind of speculated somewhere around here could be where we start to see some buying back into the US 10-year. Maybe the markets have oversold a little bit too much at this stage. We've been going down a series of lower highs and lower lows. We haven't seen any turnaround. We're, of course, going to set some alerts above these areas, set alerts above 4.2. If we do start to see US 10-year rise up, then that's probably going to push the markets down. So I think watching yields will be important over the next 24 hours. Put call ratio sitting in the middle, still a decent amount of calls out there over the puts. So that's been stacking as we've kind of built around this coiling range. Dow Jones Transportation Average still holding firm, and home builders actually putting in a pretty good session. So we'll set an alert for a new high. We already reported on home builders pushing forward, which was already a strong sign for rotation. And so far, so good for that. But yeah, we're watching. We're going to see if something does change. What about everything to do with central bank liquidity lines? They have held firm. There's no massive selling. They're just kind of coiling like the market at this stage. So we don't have any bullish or bearish signs coming in from central bank liquidity, but we are watching. Copper signs, bit of recovery here, something to be watching over the next 24 hours. If copper kind of bounces up here and then starts to sell off and makes a new low, I'm a bit worried about copper. So we'll be watching this one quite closely, because if copper starts to fall through, that's often considered Dr. Copper and something of importance. We did see the dollar reject that huge supply line again coming into the non-farm payrolls. An interesting one, because I could see like the market trying to spike a 104 and then maybe even try to short that zone again during non-farm payrolls. This could be a good one to watch, and even the euro and the pound versus the US dollar may be some of the best trades coming into non-farm payrolls if you are looking for the trap. Remember, sometimes the markets will go off in one direction, then they'll reverse. And generally, you're looking for that chess play. You're looking for the markets to go off in one direction, grab liquidity, and then come back. And it's something I teach, and I trade often in my day trading masterclass kind of setups. Links in the description if you're interested. But that's something that we talk about a lot. And the reason why is because it's actually quite a replicable way of trading the news. You don't trade before, you trade after you see. Remember, it's patience, react, don't predict. And that's kind of what you're doing here. Gold traders will be looking for a break of this little line here, which we've got an alert at, which is 2041. If that happens, we could see a little bit of uptick, maybe 2075, then possibly sell off. Do remember at this stage, we're starting to see a build of a buy position after what has been a very big sell-off. And that buy position has been from retail. So yeah, I'm not loving gold as much as I was. Now, here's where things get a little bit interesting. So let's take a look at oil. So it kind of did what we wanted. It made a new low. Cool. That's pretty cool. Then it started to rally. And of course, we've got an alert here at 70.42, which is above these week highs. Now, if that happens, we could be kind of looking at a short-term recovery back to 72 a barrel, back to that drop base drop kind of scenario. So yeah, I like where I'm looking at oil, and it is at that kind of point. Now, you might say, but Tom, it's 89% bought by retail. Yeah, but it's been like that for a while. So I wouldn't be surprised if my number is slightly out of date and that people got liquidated over the last 24 hours. Again, non-farm payrolls will move this one, and it could be very, very interesting on the charts. Let's move over to Tesla. It remains coiled. We're looking at how this weekly closes. Again, we break either of these zones. We're out of the coil. We expect a big move to occur. We'll update on the weekend video for that. Semiconductors has been weak, had a bit of recovery. We'll talk Qs to get that one. And of course, nice to see biotech having a good session again. So biotech coming through 0.71. It's just something we've been following. Of course, semis did better, but bio's done better over the last couple of days if you take every day into consideration. Let's talk indices. The German DAX, the unstoppable market that everyone's trying to short. Would I short it? Probably not. I have not seen any weakness here on this market other than it came up and obviously rejected this level. That doesn't mean it's over yet. We've seen that on Bitcoin recently. These are melt up markets. We got that coil, we broke out, and it was a big break. Look at how it's gone. So this kind of reminds me of the S&P 500. The break could be significant, and I think that's going to be an important one. Russell 2000, big rejection week, but no follow through on that one yet. So look, we remain optimistic on the Russell at this point. And here is what's changed over the Qs. So, of course, in the previous session, we had the rally to the gap and then the sell. It was actually a great trade. Then we came down to the level of the lows in the futures and we saw a rally up. Now we have a gap to the downside, which is sitting at 384.82. And we also have an S&P gap as well. So we're still coiled and we still don't have any direction, which is, I guess you would say, a traditional December. Not the one that we were looking at, which is, of course, a positive 10% year, but it is a traditional December. This is the NASDAQ. You can see the level. The S&P probably had even the better trade on it. And we know around this 16,000 level has been where we've seen resistance. If we saw a spike and then it came straight back down, I'd actually be starting to get pretty bearish on this market because that would show us that we might have that UT or Wyckoff's final last push to really liquidate people. But I do think there's going to be a trap in this NASDAQ, and we're going to have to find it and be patient on it. So for now, it's just buy and sell in the rotation range. Here's the S&P 500. You can see the gap, 45.49. We've got like this little high here. We're still theoretically bullish across the board on the S&P in comparison to the NAS, which did have some weakness in it. The NASDAQ's certainly the main weak market here. And you can see it just keeps going up and down and all around. Let's have a look at the futures market. This was our green squiggly line. Now, we're going to get a new green squiggly line, thanks to the non-farm payrolls, which we'll set up for the weekend video. But yeah, it's just up, down, and all around. There was actually a good little scalp if you'd looked at this low and it breached higher. That could have been something you looked at if you were trading within the range. I was looking for a new break low, which obviously we're looking at 45.20. And just remember, when you look at the options, there's literally a ton of options sitting here and a ton of options sitting at 4,600 and then a ton of options at 4,630. So there's that's why we're coiled. It's just so profitable to sit here while people are making bullish and bearish bets on options. They expire them, then they start to push out. Jobs numbers or big economic events is what allows these markets to push out of these ranges. So again, we're looking for it. And what's going on with Bitcoin? Well, from a very short-term perspective, you do start to have weakness here for the first time. This was an okay short off 44K. I think on the high time frames, you've really got not much to be concerned about. You don't have that 46 to 48,000 just yet. We're looking for that ideally. It's been a great run on Bitcoin, but we also don't have that huge sell-off that usually happens before everything kind of turns. So at this stage, the trend's still up. Very small time frame trend trades might be in. But look, non-farm payrolls is one of the weirdest times in the market during the month. It's probably the number one time I tend not to look at markets and trade them. And the main reason is because we all know that the market loves to go one direction and then the opposite direction during these kind of events. It can very easily do so because of the nature of the revisions in it as well. So what's going on? Well, this is the expectation in terms of what we're expecting from the jobs numbers. The thing is, it's not just even this number, it's also the revisions of the previous two numbers. I mean, it's such a joke. They revised the other numbers like 60,000, 50,000. I mean, what are they even doing? But that's why the market freaks out and it tends to move quite a lot. Do remember, patience and reaction is generally the better way to think about this particular market, but you've got to have a game plan. You've got to be playing chess with it and not checkers, yeah? And what we want to be doing is really sometimes revisiting it after the weekend close, after that point, and then revisiting what the big move could be next. Thanks very much for watching. If you're interested in finding out more about our post opinion on the non-farm payrolls, make sure to sign up for VIP free weekly newsletter. We'll be going through thousands of charts and sifting through them to find 5 of the biggest ones that will really reflect what's happening in December into 2024 from a chart perspective. Thanks so much. We'll see you in the next one. Subscribe, smash the alert button. Bye for now.